Hello and welcome to another update video about Ethereum. So Ethereum is following through to the downside and it's getting close to the target range that I indicated in previous videos. I'm watching here the area between 1830, 1829, and 1781 as a key target range to wrap this entire correction up. I wouldn't be surprised if it breaks briefly below the 61.8 retracement, so 1781. Because if we zoom out a little bit on the ETH chart, go to the 4-hour chart, you will see that Ethereum reached and touched that particular trend line here a few times, actually 5 touch points here. So maybe it's going to touch it again, and that would be around 1730. We're getting there. We've been patient with this chart. It has been frustrating, basically because it has been very, very boring. But we've been waiting patiently, first of all, for these 5 waves up, which occurred. Actually, we expected the 5 waves to be finished here. It actually made one more higher high here, which in the end I decided then to count as the 5th wave of the first wave. So we've got a 5-wave move up here off the 15th of June low. There are other ways of counting this. Surely you could place the wave 1 here, and then we say in yellow, highlighted in yellow, okay, we had an A wave down, we had a B wave up. But I think we would have problems to count this now as a C wave down. So I'm very happy with the wave count that we chose because it makes more sense. With an A wave down, a weak B wave, and now the C wave to the downside could be unfolding if we want to have a better understanding of the micro level. And I did count the B wave as complete. Left it a little bit open though for the potential for a higher B wave, but it doesn't seem to need it. So yesterday I indicated on Telegram and Discord that we could get a bit of a reaction here, at this trend line, and actually we did. It couldn't push above it. It's not a very well-defined trend line, I have to say, but it's sort of still respected resistance here. Actually, with this previous swing high, maybe that was more of an effect here. But it seems like we're getting more and more confirmation that indeed we are in this C wave to the downside that we waited for. It's the C wave, the last wave of this wave 2 correction. If this wave count is correct, then we should come down a little lower. Again, I'm watching sort of the target area between 1829 and 1781. It could go a little lower, below 1713 if we get a sustained break. Let's say if we get a sustained break below $1,700, then this setup is likely going to fail. It wouldn't mean that the entire chart goes bearish, but it means that it's certainly not short-term bullish anymore, because this is seen currently as the launch pad for a third wave rally to $2,500 or more, only if the 1713 level is holding. So I scale into this area. How exactly I'm doing this, I communicate to channel members on Discord and Telegram. It's always the same strategy. And to participate in a third wave rally. I mean, setups can always fail. You need to know that. It's only probabilistic, but it's not really all about identifying setups that necessarily need to hold. It's about identifying high reward, low risk setups, and that's really the benefit of Elliott Wave risk management, to identify those setups where a lot can be gained, a lot of profit can be made with a little risk. If you know how to do this, position sizing, stop losses, and so on, and where it gives us very clear levels where we have to change our perspective. That is the information that's really pure gold that can allow us to make profitable trading decisions while focusing very much predominantly on risk management. And the idea needs to be long-term in this game, not to risk the house with one single trade in the hope of getting rich in one single trade. That rarely works, and it can if it doesn't work, it will make you broke. So it's all about risk management, capital preservation, and Elliott Wave is a great tool to help us with that. And also it gives us this roadmap here, which so far is working out. However, I think Ethereum hasn't quite reached here the target in this third wave. I must admit, I haven't got the best micro wave count here for this third wave down. I'm also not going to attempt to add any more micro counts to this, because it is a bit messy and it's likely going to be invalidated if I go any more micro. But the idea was for this third wave target to reach roughly 1825, 1820, the 1.618 extension, very, very good overlap with the 1829 level, the 50% retracement. Somewhere here in this region, I would expect this third wave to be wrapped up. To retrace basically in a fourth wave, and then to come down in a fifth wave to wrap this entire thing up. Again, Ethereum likes to retrace to the golden ratio. That would be at 1781. If it goes a little lower, no problem. It did that on the 15th of June as well. For us, it's always important that the 78.6 Fib level is holding eventually, yeah, in these setups. It's no problem going to the golden ratio. We actually want that, yeah, for a wave 2. So yeah, I'm very happy with the price development at the moment. It's just at some point then needs to stop dropping. But I mean, that's at the moment exactly what we've been waiting for. So I'm very happy with the development now. Just note that at some point, if it gets very close to 1700, the risk of a break increases. But for now, we are far away from that. We've got several Fib levels still as support, and we have the trend line as support. And you need to understand that it can drop quite a bit, and then it can turn around from one moment to the other. The sentiment can shift in crypto very aggressively. That happens all the time. It happens all the time that people wait for one more low, and then let's assume it would rally now. The analysis would have worked out perfectly, yeah, with this support area here and everything was set up. People would still wait for another low, and then they would always be upset. But again, you have to make that decision for yourself. I decided to start to scale in already, slowly and steadily, and then basically waiting for confirmation that the price is turning around. Some people like to wait for confirmation that the downtrend is over, the local downtrend. That's a different strategy, but that really depends on your own personality, right? So if I manage my cash properly and I have cash set aside for exactly these moments, I'm happy to scale in on the way down, not to use everything for this one setup, but just maybe certain percentage that I communicate to channel members. Then I want to see price turn around, have the first 1-2 set up to the upside in the third wave, then we'll add more with a very tight stop, because only if I have the turning point confirmed, I can add a very tight stop. At the moment, I leave it a lot of space when I scale in, very much aware of my position sizing. That's very important. This is not something for someone who's going all in, all out. Doesn't work. And well, if it works for you, power to you. It doesn't work for me. Yeah, like scaling and leaving them a lot of space until we have a confirmed trend reversal. Then we have a very clear stop, which is below the first 5-wave move up, and yeah, all stuff like that we talk about a lot in the channel membership as well. But this should give you everything you need to know. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.